One of the biggest challenges facing President Cyril Ramaphosa as he tries to revive investor confidence in Africa's most industrialized economy has been the power cuts that have cost the South African economy up to 120 billion rands, an equivalent of $8.3 billion last year, and is expected to carry on for the next 2 to 3 years. Ramaphosa has promised to break up state utility Eskom, the largest producer of electricity in Africa, to make it more efficient, and granted it a series of bailouts to stabilize its finances. The government has been urged to move swiftly to ease regulations governing self-generations of electricity by companies and households as a way of minimizing power cuts in this year. Elsewhere, e-commerce company Jumia Technology, which last year became Africa's first tech firm to list in New York, will focus on proving it can turn a profit after a tough 2019. Late last year, it shut its e-commerce services in Cameroon and Tanzania and halted food delivery in Rwanda. Its third quarter adjusted earnings before interest, tax and depreciation and amortization loss widened to 45 million euros, up nearly 27% from a year earlier. Jeremy Hodara said the company aims to capitalize on its payment platform and infrastructure network and to boost revenue from services to third-party sellers on its online marketplace. Having hit a peak value of close to $4 billion, Jumia has seen its shares fall by nearly 70% since its IPO last year, after a short seller Cyton Research casted doubt on its sales figures, which dampened investor confidence. Odara went on to say that the business scaled up, cost will come down, and improvement on its algorithms were also helping. Meanwhile, the company is also looking to increase extra services it offers to sellers for a fee alongside the warehouse space, marketing services, and search engine optimization it already offers. And finally, central banks in Nigeria and Ghana will leave interest rates stable in coming days as they keep an eye on inflation that awaits to see an initial of US-China trade deal pans out. Ghana's central bank is expected to keep rates steady at 16%, with Nigeria at 13.5%. Interest rates in Africa remain too high for consumer and business to access. CT expects the Central Bank of Nigeria to continue unconventional policy measures such as aggressive use of open market operations and the cash reserve ratio to control liquidity, with CRR currently at 22.5%.